Really, it's a reversion to the trend that's prevailed for a little while right now. The Dow hitting a new high it's actually a relatively long time within a bull market to be below its high, so it's kind of caught up to the rest of the market in a big way. And looking at today's action, a lot of these rally days recently, you've been able to kind of do the yeah, but story and say, well, it wasn't a very broad rally or there was something that was holding them. Today wasn't the case, right? You had 3/4 of all stocks up. Volume was very good. Almost all sectors participating. It didn't seem like it was just kind of a technical adjustment. It was a real breakout. So we'll see if it was the start of anything. By the way, the year-to-date gain in the S&P is going to be pushing 10%. Almost all of it since like June 29th. So this has been a very strong 3-month period.
Stephanie, I guess when we consider as well some of the big talking points of the week, it's still been China and trade, and yet markets have pushed ahead despite there being no improvement really in the headlines there.
Yeah, I think this week is actually really about yields inching higher. That's actually been something that's been kind of a surprise. And also the dollar working its way lower. And so you've had a real risk-on feel this week in terms of cyclicals, value outperforming IWM. So it's back to kind of, as I said, risk on. I think what's really clear, though, is that the August and September economic data is showing real improvement from the lull we saw from May until July. I mean, you look at the Architectural Billings Index, that actually reaccelerated. The Philly Fed reaccelerated. Initial claims best since 1969. The economy is doing well, and rates should rise. So rates are rising for the right reason. People feel more confident.
Yeah, the confidence factor is key. It really feels like investors are teeing off the fact that confidence has not been shaken, Mike, by the trade brawl.
Well, it's always been the eye of the beholder, right? I mean, the trade stuff was always about kind of fearing some hypothetical down the road that might in fact hurt corporate profits, global trade, something like that. It's never been about what was actually happening. And I do think that's why it was mostly really a sentiment story. It was about the what ifs of if this flared up into a real trade war, whatever that might mean. And I think it was an excuse for people to get defensive more than anything else. Again, to your point, Wolf, nothing really has changed. The higher we go, the higher the market valuation gets, the more susceptible you become to some headline out there like the president adding $267 billion more in Chinese goods we're going to tariff. So it's not necessarily a matter of a declaration by the market that something is settled and solved. It's much more about more good offsetting the risks than anything else.